Hello, everybody. Welcome. Let's get started. Please let me know how the audio is. Let's get started with reading the news here. Overall markets are down 1% across the board, except for Broadcom and Apple, which are up a little bit. Meta is down 4%, Amazon, Tesla down 4%. Walmart and Costco are down quite a bit too. It's a major sell-off across industries, except for energy, like oil stocks and healthcare stocks. This is and utilities. This is definitely a recession type of trade going on today, which is my base case. I think there's going to be a recession starting this year, if it hasn't started already. 5-year Treasury yield is down 6 basis points to 4%. 10-year Treasury yield is down 4 basis points to 4.24. 30-year Treasury yield is down 2 basis points to 4.56. So there's a steepening going on in the curve. Not much change in the 2-year yield. Actually, never mind. There's a 6 basis point drop now. 390. So the market is starting to price just in the last 5 days, not much of a change. In the last month, however, we've seen almost a 50 basis point drop in the last 3 weeks or so in the 2-year Treasury yield. So the markets are starting to price in a bit of a recession, more rate cuts type of thing. But I think the market is running ahead of itself here. Let's look at the Fed watch tool here. I don't think the Fed can cut rates at this time. So no cut expected for March. For May, 57% probability of a no cut and a 44% probability of a cut. Pricing for May. I don't expect, unless the markets really sell off at a very accelerating pace. I mean, if there's a gradual decline from the current 10% drop in NASDAQ to, let's say, 20% drop in the next few weeks here, which I think is it's a likely scenario. I don't think the Fed would cut in that situation in May. The first cut is expected in June now. A 54% probability of a 25 basis point cut. There's actually 11% probability of a no cut expected for June, which is, I think, possible, especially if tariff talks, if there are tariffs and a material amount of tariffs, like, not maybe, I don't think anyone's expecting here a 25% tariffs to stay, on Canada and Mexico. But if it's anywhere between like 10 to 20%, I don't think the Fed will. I don't think the Fed will cut in the first half of this year, even though I think the stock markets will decline, especially the stocks that are extremely overvalued, like Nvidia, Rivian, Tesla, and many other stocks that are like Palantir. Many of the stocks that are super overvalued, I think they will come down at a rapid pace in the next year or two. But I don't think the overall market, energy stocks, for example, oil stocks, I don't think they're very expensive. Some healthcare stocks aren't very expensive. Let's see where the I don't think many stocks are undervalued, but let's see where the relatively okay valuations are. I don't think healthcare stocks, except for maybe UNH, is very expensive. Oil stocks aren't very expensive. Let's see here. Assuming deregulation, assuming deregulation, I don't think capital market stocks like Morgan Stanley, Goldman Sachs are very expensive. And some of these banks, like, they're not overvalued. You know, if a recession hits and the consumer, just stops trying to borrow, I think that's one scenario for banks that is not very good, obviously. But overall, right now, the banks are going to be very expensive. Um, in semiconductors, some of the cheap stocks are Micron. Um, that's about it. And then in telecom, some of these telecom stocks, I mean, you have to kind of, yeah, some of these telecom stocks aren't very expensive right now. Just kind of first look. But some of these like real estate companies, REITs, I don't know what's going on there. These are really expensive stocks. I'm going to take a note here. Maybe we can take a deeper dive on REITs. Not sure what's going on with that one. Let me just look at one more thing on REITs. Yeah, some of these REITs are really expensive. Yeah, that's crazy. I should do a sell article on a couple of these. Let me just look at one more thing. I mean, I know JP Morgan's CEO recently said he wouldn't buy his own stock at current prices, but I don't think JP Morgan is a very expensive stock here, especially assuming deregulation. You know, Broadcom surged overnight. We're going to take a closer look at Broadcom earnings. After earnings, it surged like 18%. And I took a just first look last night, and I was like, "There's no way. This is like I don't think that move was justified." And then today, Broadcom is up 4%, so down from plus 18% to plus 4%. And I think it's actually a pretty expensive stock as well as other chip stocks. Yeah. Although their partnership with Apple and others, Apple, Google, and others, is positive for the company. I don't think it's going to come down as much as Nvidia, but it's not a cheap stock. So I don't know why people are trying to pile into it. There's a lot of buying the dip going on, especially from retail investors, that is not going to end well. Rivian is down below $11 per share, $11 billion market cap. I know they have some cash on the balance sheets and Volkswagen backing and everything, but fundamentally the company shouldn't survive. It's just not a good company. GM, Ford, they have their fundamental issues. Walmart and Costco is an oddball too. If you look at the PE ratios, they look overvalued. But I'm like, if you have to invest in stocks, and like if you have to have an allocation of stocks in your portfolio, and these are both great companies, they're going to do well in the future, and they're also not too bad to be in a recession situation. So it's like I have a hard time saying sell those stocks, but valuations are crazy. Like Costco is trading like 50, 60 times PE ratio right now. Forward, historical, doesn't matter which one you look at. Those are really expensive valuations, just on a PE basis. Yeah, PEG ratio, Costco 6, Walmart 4, crazy type. I mean, I wouldn't want to be in stocks right now. The only stock I have on the long side is Oxy Petroleum, and it's doing well today. So I think oil price is a little too low right now. Oxy is at $47 per barrel. I mean, $47 per share, and it's a pretty reasonable valuation. The only time it went down below that level, below current level share price wise, was back in COVID when oil prices were like negative, and it just bounced back after a few months. So Yeah, it's a walk-around company, 20 times P ratio, $44 billion market cap, 2% dividend yield, and it's a pretty safe place to stay in terms of you know, in the next few years, I think. Tesla's down 4% today. I was looking at the stock earlier today, and I'm like, I just don't see how the stock doesn't drop below $100 per share. The fundamentals are just horrendous. The CEO silently quit on shareholders without saying that he's quitting. And some of the things that he says on earnings calls is just wild. Um, I don't think many people believe it, except for maybe some retail shareholders. But uh, it's really sad what happened to Tesla stock in the last year or so, where it kind of surged, and the CEO goes on the earnings call, starts pumping everything that's kind of like out there. And then since then, the stock is down like 50% in a I mean, this is one of the fastest pace of drops in Tesla stock. And I think it's maybe like halfway. Everything's done. Let's read this Reuters article as we usually do. The summary of the markets. Wall Street retreats as cyclical stocks drag after jobs data. Powell in focus. Wall Street's main indices gave up early gains and fell on Friday, dragged down by cyclical stocks after. Give me 1 second. Okay. If someone please let me know how the audio is on YouTube, I would really appreciate it. Okay, Lumi says it's fine. Thank you, Lumi. All right. Actually, I don't know if that's what he said. He's giving me a thumbs up. But if someone could please head over to YouTube and check the audio, I would appreciate that. All right, let's just go through this. Wall Street's main indices gave up early gains and fell on Friday, dragged down by cyclical stocks after key U.S. jobs report failed to soothe worries about a slowing economy, while investors awaited comments from Federal Reserve Chair. Yeah, just a quick word on the employment report. The employment report was weaker than what the headlines suggest. The employment report was weaker than what the headlines suggest, and that is in line with my recession is starting rhetoric. Dow Jones fell 1%. All the stocks went down 5%. Cyclical sectors such as consumer discretionary fell 3%, while banks such as Wells Fargo and Goldman Sachs declined, pushing the broader bank industry down 2.8%. Most mega caps also dropped. Meta and Amazon fell 3% each. I mean, all of these stocks are pretty very expensive valuations, especially Meta as well. Meta still, and Google as well, they still get most of their revenues come from ad sales. And in a slowing economy, obviously ad sales are going to slow down as well. Let's see. A Labor Department report showed job growth picked up in February from the previous month. However, unemployment ticked up to 4.1%, adding to worries about the economy's resilience. Following the data, traders revised their expectations of the first rate cut this year to June from May, according to data compiled by LSEG. There's no urgency for the Fed to act on rate cuts based on the latest labor data, and to a degree, we're still worried about the potential impact on prices from higher tariffs, Chief Investment Strategist, UK Financial said. I was told that the audio quality is good on YouTube. Thank you. Adding to the dour center, Morgan Stanley lowered its growth forecast for the economy. Comments from Fed Chair Jerome at 12:30 p.m. Eastern. Oh, 10 minutes. Let's go. We'll now be in focus as investors expect to get more clarity on the central bank's policy from his speech. I bet you, actually, I'm not going to bet on this. I think he's going to be more hawkish than, I think he's going to be more hawkish than expected. On the other hand, the 2-year yield is coming down fast in the last like month or so. Came down about 40 basis points. So, 3.9. The Fed is currently at 4.25, 4.5. So, the Fed, I don't know. It's hard to say. It's hard to call it here. I mean, I think that they will want to. I think he's going to stay. I think he's going to. Here's my bet. I'm going to write this down. So when someone doesn't want to take the other side of a bet, I try to write it down in my journal anyway. I'm going to bet that Powell will signal in 10 minutes that they will stay higher for longer. I think they will signal pause. Powell will signal stay higher for longer, but he's not going to use those words. Okay, he's going to say, he's going to signal a pause, and he's going to say, here's what he's going to say. He's going to say that he doesn't see a reason why they should move. Or patience. He's going to say patience. We're going to remain patient. Patient on rate cuts. That's what he's going to say. Patient. Okay, so I'm betting myself here. I mean, I'm betting myself. I'm writing down on my journal here because I don't think anyone's going to take the other side of this, and I don't think people like I don't. Okay, I think Powell will signal stay higher for longer, a pause, and remain patient. I think they're going to remain patient here. On the other hand, I think the quantitative tightening will come to an end soon. I don't think the economy can sustain further quantitative tightening. So we're going to say patient on rates, okay? Patient on rates, but QT nearing an end. Okay, so that's what I would say if I was him. If I were Powell, that's what I would say today in about 5 minutes. Okay. Actually, I think his speech kind of leaks out. Look, maybe they released it early on. So we might actually get the headlines here. I don't really want to end the space for it. But we have a couple of people request to speak. I don't want to end the space for it. But we can't read the headlines that come out. Lumi, why don't you go first? How are you?
Yeah, I'm good. I'm surviving in a down market. I tell you, I've got a strategy which is kind of crazy, but it's been working.
What's the strategy?
Basically finding good dividend stocks, like for example, IEP, and then writing cover calls in the money so that I get the dividend essentially, and then I make a small premium from the cover calls. So that's my secret while it's been going red. Yeah.
Okay,
But
great.
Yeah.
Great. So you are kind of writing cover calls. Okay. Interesting. So you don't expect a bounce then?
I mean, I think sideways is the new trend because of the uncertainty at stake. Shutdown, tariffs, data, Fed, too much uncertainty. People are gonna, it's just gonna go sideways.
Okay.
Sideways down.
Okay. Yeah, sideways down sounds about right to me. Tesla Canada? Tesla Canada, you have to unmute yourself for us to hear you.
Here I am. Oh yeah, I'm up in Canada. I got a Model Y launch due in either in the next few weeks, maybe April. And I watch the tariffs very closely. And this whole yo-yo of tariffs on, tariffs off, it's causing a lot of uncertainty, obviously for me, but I think for the market. And my prediction is a short or a longer recession because too many things at play, wars and trade wars.
Did you say you have a launch series coming to you?
Yes, it was just got
Why are you buying the launch series? You're paying $60,000 plus, and it's going to be $40,000 in like 6 months. Why are you wasting away $20,000?
because I'm old and I have lots of money in Tesla stock that is, if I don't spend it now, I won't be able to afford the next one in the summer if my values go down to much lower. So I just and I like the launch edition. Everything, I'm happy. I probably wouldn't have bought FSD. I would have done it monthly, but I need a car with FSD, and I'm tempted to buy another car, but there's nothing like a Model Y for me. So there you go. But I think a recession is coming.
Yeah, what makes you say that recession is coming?
From what I read, and because one quarter, you don't see it. It's all over the place. And the good news is the recession's over and things get better, but it could take 10 months. So by the end of the year, we'll all be happy.
Okay.
Get it over with. I think we're overdue.
Okay, thank you. I'm going to continue with this Reuters article. Please stay on mute.
Yeah.
Quote, there is no urgency for the Fed to act on rate cuts based on the latest labor data, and to a degree, we're still worried about the potential impact on prices from higher tariffs. It's Steve Wyatt, Chief Investment Strategist at BOK Financial. Okay, so that's exactly what I said. I like everything I saw on the inflation front. There is a risk that inflation can go higher. And until tariffs, we know a much better, clear picture, which is not going to happen for months, on tariffs and the impact on the economy. I just don't think the Fed can move. Comments from Fed Chair Jerome Powell at 12:30 will now be in focus as investors expect to get more clarity on central bank's policy from his speech. Equities witnessed their most volatile week this year with Wall Street's fear gauge. I don't think fear gauge is the right thing for this, but trading near levels not seen since mid-December, as traders try to assess Donald Trump's fluctuating trade policy. In the previous session, the Nasdaq confirmed a 10% drop from its December all-time high, while the benchmark S&P 500 appears to have reversed most of its gains since Trump's election victory. The indices, along with the blue chip Dow, are on track for their biggest weekly drop since September. Equity funds witnessed the largest weekly outflow in 4 weeks in the week ended March 5. Trump on Thursday offered a 4-week reprieve on tariffs he imposed, blah, 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 additional reciprocal tariffs and other duties. 30 seconds to the speech. How Hewlett Packard Enterprise, I saw this one too, slumped 16% after saying its annual profit forecast would be hit by US tariffs. Yeah, there you go. Costco fell 7% after retailer missed street estimates on quarterly earnings as merchandise costs increased. Interesting. And that's before tariff costs hit. Interesting. I need to read Costco a little bit more, maybe write an article on it. I'm going to take a closer look at Costco. Broadcom, on the other hand, rose 2.9% after chipmaker assuaged investor worries about AI infrastructure bullshit. Gloomy?
Yeah, I've got a question. Do you know anything about the sovereign wealth fund, which has been announced, what they'll be purchasing? That's going to be an interesting situation.
Yeah, who knows? Maybe they'll buy some Tesla stock and buy some Starlinks to do the trades on, and maybe put some chips in federal employee brains. Trump says we can't let Iran have a nuclear weapon. Trump also says something's going to happen very soon with Iran. Hopefully, we can have a peace deal. So he's escalating his war, Cold War on the rest of the world, basically. Fed Chair Powell says U.S. Central Bank does not need to be in a hurry. Boom! That's exactly what I said. I said patience. Put that bet. That's a check, bruh. Let's go. Fed Power says central bank does not need to be in a hurry to adjust interest rates. That's literally what I said 10 minutes ago, because that's what I would say. That's what I would say. What else does he say? Let's hear it. Powell, despite elevated levels of uncertainty, the U.S. economy continues to be in good place. Labor market is solid, and inflation has moved closer to our 2% longer run goal. As we parse incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry and are well positioned to wait for greater clarity. Yeah, that's exactly what I would have said. Uncertainty around Trump administration policies and the economic effects remains high. Yep. Expect path to 2% inflation to be continue to be bumpy. Okay. Anything on inflation expectations? Let's go. Anything on some near-term survey and market measures of inflation have moved up. Boom. Oh my God. Man, I could have written this fucking speech. That's crazy. That's crazy. I could have written this thing. Wow, that's wild. Okay. This is gonna go to my head. This is gonna go to my head. And that's why we have this title. Tesla will triple in 2022. Title is here so that these things don't go to my head. But expect a massive sell-off on stocks like Tesla. I don't see how Tesla doesn't get to below $100 per share and Nvidia to $80 per share. I mean, these are easy shorts. Anything with an extreme PE ratio is gone in the next few months. I can't guarantee anything, but I'm highly confident. Okay, see, I told you it's going to go to my head. I told you. Lumi.
No, yeah, you crushed it. And I was going to say this one thing. It makes perfect sense. They really want to kill inflation, and they have one opportunity because there's going to be rampant inflation while there's all these adjustments between tariffs and borders, and producing something in-house in America or outside. So this is like a really decisive way to keep inflation down while there's this transition, and they're not going to take their foot off the throat of inflation at this time because they know that the potential for it to get out the bag is going to be on the upside massive. So this makes perfect sense. You called it right. And I think that the market is going to correct massively because there's no free lunch, and yeah, it's going to be brutal for people. But that's why I think my strategy of just looking for dividends might be and doing the cover calls in the money is kind of smart maybe in this time.
Okay. Yeah, I mean, yeah, I think that's a reasonable strategy here. Tesla, implied value volatility is very high, so I think people are getting margin calls and buying calls instead because of another way of buying the dip, I guess. All right. So that covers on employment. I think the employment market is not as strong as Powell is talking, but I don't like. I think it's a bit weaker than what he thinks, just slightly. And we actually got a couple of data points that are like a first-time data points that are recessionary in this employment report, but I have to see a couple more data points, and I think he's waiting for the same to call for a recession. I think, yeah. Okay, let's see. I think tariffs are definitely coming. There's going to be some level of tariffs definitely coming. I don't think it's going to be 25, 25, 10. But tariffs are stagflationary. There's no question about that. U.S. short-term interest rate futures keep bets on June Fed rate cut and 3 rate cuts total for 2025 after Powell says Fed does not need to be in a hurry. Yeah, the market is calling the Fed's. The market is saying the Fed will have to cut, even though the Fed is saying we're not going to cut anytime soon. And this is not going to end well on stocks, I don't think. So, you can see the stocks pretty much unchanged on Fed's. Actually, they're rising a little bit on the Fed comments because the market is saying the rate cuts are coming. But I just don't think, I think the market is going to be disappointed. So, sell the rips is my motto for 2025. Let's see. Powell says, as we're parsing income information, we're focused on separating signal from noise. We read that already. Trump canceled grants worth of $400 million for Columbia University. That's huge. Anything else? Anything else? Powell says new administration is in the process of implementing significant policy changes in our distinct areas, in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of this policy change that will matter for the economy and for the path of monetary policy. Okay, that's good to know. Anything else? Any other comments? And that may be it for Powell here. Okay, let's see. Any comments or questions? Any comments or questions? If not, I want to read something on Broadcom because I have a short on NVIDIA. Broadcom is a competitor to NVIDIA. Their comments may not reflect what NVIDIA is seeing. And that, NVIDIA stock didn't surge when Broadcom stock surged 18% yesterday. Broadcom is now up 5% and NVIDIA is down 1%. So that, that's in line with my thinking of Broadcom and NVIDIA as competitors. Also, Broadcom isn't as overvalued as NVIDIA. In my mind, I think Broadcom is building some relationships that are better positioned for on the inference side than NVIDIA is. So that's good for them. But I don't think it's a cheap stock either. So I wouldn't do that. Let me see here. Lumi?
One thing that just keeps rerunning in my mind was when Trump was speaking to reporters and saying how he successfully didn't need to spend any money to get all of the chip manufacturing coming back to America. And I think that's actually really smart, but also at the same time is an absolute slap in the face to the people who are speculating in all this free money. And I think all these sell-offs are a lot of people who were doing that. All the Trump trades got killed, basically. I think nearly every single Trump trade got killed. That's my thinking.
Yeah. All right. Okay. Let's see here. Broadcom shares surged over 3% in the morning as the company reported first quarter earnings that exceeded analyst expectations and provide strong guidance for the current quarter. I might do a Broadcom earnings call watch party tonight on YouTube. And maybe they'll give us some thinking about it. I haven't decided yet. Maybe they'll give us some color on how they're thinking about AI. Costco shares fell 6%. We talked about it. Hewlett Packard shares fell 15% as the global edge to cloud company issued weak guidance and initiated cost-cutting measures. Yeah. And maybe we'll do both Broadcom and Hewlett Packard at the same time. So that would be a long one, but it is what it is. AI powerhouse NVIDIA rebounded in the morning after sliding more than 5% on Thursday, possibly lifted by Broadcom's strong earnings report. Well, that was old news. Walgreens shares rose 7% after take private. Okay. Nothing interesting there. But it's so crazy that the Broadcom stock surged 18% in overnight trading and now down only a couple percent. Up a couple percent. That's wild to me. That's so crazy. I mean, what an opportunity if you want to short the stock in after hours. Lumi?
Look at Big Bear AI down. It was 20-something% or more, just because of their earnings was horrific, but also they thought they were going to get all these government contracts and they're all lined up, and then the new government doesn't seem to be giving out. Well, it's reviewing everything. Let's put it that way. And so, it dropped off a cliff. A few AI companies dropped off a cliff recently. Another one was SoundHound AI, which Nvidia sold their stake in it, and it dropped like 30% in a day. There's a few, it's just been crazy for the chip in general. Like then there was DeepSeek before that, so it's just a bloodbath out there.
Okay, Lumi, please stick to questions only. Only questions. Thank you. And actually, let's move. I'm having issues with my screen here, but just stick to questions and please stay on mute, everybody. Let's see. Dan, I want to cover this Dan Ives note. He went on CNBC talking about the same stuff. He said on CNBC, here's what he said. Okay. Sell-off is an opportunity. Years from now, this is going to be a generational opportunity. Based on survey work, we think less than 5% of Tesla owners will think twice from a brand perspective because of Musk. That's such bullshit. Man, this guy's full of bullshit. Tesla AI chatbot now uses vehicle data for personalized responses. You can ask questions such as, what alerts were recently triggered on my vehicle? Is my tire pressure low? Okay. Or you could do this on the so. Buyers in Australia who purchase a new Tesla Model Y long range or Model 3 from Tesla's inventory will now receive a free universal mobile connector charging 5,000 kilometers of supercharging credits. Yeah, so that shows the demand for Teslas are low, even in Australia. So Australia is a market where I kind of pay attention a little bit because it is not China, where BYD and Chinese automakers have home court advantage. And it's not US, where Chinese automakers are kept out of, which is fucking crazy. And so Australia is a good kind of neutral market. It's a good size where everybody is on equal playing ground. It's not as protectionist as Europe or US or China. So it's a good area where you can see like there's ample supply of all players, and the buying public is on average kind of like is representative of people who can afford a Tesla. So even in that area, Chinese automakers are gaining market share on Tesla. So that tells me, on average, just kind of like one more data point that Chinese automakers are producing cars that are better than Teslas and selling them at a cheaper price. So anywhere outside the US in international markets, including China and Europe, I just don't see how Tesla doesn't continue to lose market share. So that tells me the low margins for Tesla are here to stay. They're here to stay, and I think they're going to continue to decline throughout 2025. And energy is not big enough to make a dent on this trend. And I think robotaxi optimists are 5 to 10 plus years away. So that's kind of like a reason why. That's why I think Tesla stock is headed below $100 per share. All right, let's continue. Starship, had a bad launch yesterday. And I think it's just one more data point that supported my theory that without Elon, all of these things kind of return back to the normal. So Tesla without Elon is Rivian. SpaceX without Elon is Blue Origin. Kind of, theory is just one more data point here, I think. SpaceX says, with a test like this, success comes from what we learn, and today's flight will help us improve Starship's reliability, etc. The usual rhetoric from SpaceX. Wedbush analyst Dan Ives has added Tesla to his best ideas list and reiterate an outperform rating and $550 price target. Dan says there have been a number of times in Tesla's story over the past decade that negative sentiment and street worries have overshadowed the narrative of this unique, disruptive global tech story. From the white knuckle production moments in 2017 to 18 to financing worries to the Musk Twitter soap opera in 2022, and now here again, Tesla bulls find themselves in their back against the wall, facing global negative sentiment around Musk, Doge, and the Trump administrations. This is a gut check moment for Tesla bulls, including ourselves. After this massive sell-off in Tesla shares, with fears mounting, the bears now own the Tesla narrative in the near term as lackluster sales numbers from Europe, China, and US. In January, February, along with Musk protests, brand worries have created many concerns. This is the start of the biggest innovation tech cycle in Tesla's history, headed over the next few years. First, we expect lower costs, sub 35,000 new models before this summer, and will help drive pent-up EV consumer demand globally. So, okay. What pent-up demand? Where is the pent-up demand for EV consumer demand? Are you fucking serious? That makes no sense. Prices are going down everywhere. Margins are going down. Where is the pent-up demand? Is this guy high? And get Tesla back on the growth track and heading towards the 2 million run rate delivery trajectory. The launching of unsupervised FSD in Austin, Texas this June kicks off the autonomous era. Oh my God, he's a mess. There's no critical thinking whatsoever coming from Dan Ives. Tesla will own the autonomous market in the US and globally, and other bullshit. We believe autonomous options will represent 9% of valuation. Okay. Let's address the elephant in the room. Musk and Doge. That's not the elephant in the room. The competition is the elephant in the room. While Doge, Trump, Musk, ironclad partnership has created major brand worries for Tesla, we estimate less than 5%. That's another bullshit. Yeah, this is just, I mean, okay. I said what I said. And a bunch of SpaceX posts. Good summary on the state of the economy, which aligns with your forecast. Alphabet says, I agree. Thank you for subscribing to Alphabet. I appreciate that. Yeah, I think the Trump administration sees a recession as a near-term recession as a kind of like, collateral damage. And they're convinced that on the other end of it, the US economy will be better. And so is Elon. Elon and Trump are convinced, and also Bassett are convinced that on the other end of it, even if there's I don't think, some people think that they're on purpose trying to create a recession. I don't think that is the case. But I think they see it as a collateral damage. And they think that it's okay. Because at the other end of it, the economy will come out stronger with private capital leading to higher productivity growth. I'm not as certain of that. I think the path would be more, arduous than they think, but yeah, it is what it is. That's why we have a market here. All right, stocks have recovered almost to break even. Let's look at some of the names. Tesla stock is at down 2%. I don't see how it doesn't get to 100 or below 100 even. Amazon down 2, Microsoft down 2. So where's the recovery coming from? Axie is up 3. Broadcom is up 5.5. Interesting. So where is the recovery coming from? I don't understand. I guess maybe oil stocks are higher. Costco is down 8%. Jeez. Yeah, I don't know where this recovery is coming from, honestly. Because all the Mac 7 are down. Apple, I guess, is up 2%. Let's look at Apple. Apple is pushing a little bit higher, up 2%. Okay. That's in line with my kind of, safe haven type of trade that's going on. Apple stock is, majority of the balance is cash. So, I saw somebody talking about shorting Apple. I'm like, dude, you're shorting cash. Ford is up 3%. That pushed up a little higher, I guess. Let's see. I can narrow this down. I think this is coming from Dow Jones. Yeah, Nasdaq is still negative. Dow Jones is higher. So in Dow Jones, you have Apple. Let's get Dow Jones components. Amazon is down. American Express is down. Amgen is up 3. So healthcare is up. Apple is up 2%. Boeing is down 5%. Wow. Caterpillar is up. Chevron is up. Okay, so oil stocks and Apple is up, and healthcare. So that explains. That explains it. IBM is up 3%, and Verizon is up 4%. Okay. And what else did I want to cover here? We talked about tariffs. I might do an ABGO Broadcom watch party tonight. We'll see. We talked about DNIs. We talked about unemployment. We talked about inflation. I'm going to take a closer look at REITs and Costco later. All right. Any other questions, comments? Trump considers sanctions to push for Ukraine peace. Okay. And NASDAQ plans 24-hour trading, maybe in 2026. Poland plans military expansion and training. Okay. Lumi?
Any news on the Texas exchange?
I don't know. All right. So that's that. Perfect. Let's call it a day. Early Friday, half day Friday. Thank you very much, everybody. And I'll chat with you all next time. Enjoy your weekends. Take care.